Good evening. This is Ken Long from Tortoise Capital Management, January 3rd, 2011, with the market health check and the daily trading plan review. We'll start with the market health check. Again, we're looking back 10, 20, and 30 days on the vertical blue lines. The horizontal red lines are support levels. I've added one at 125 to reflect the support level near the 20-day moving average. We have price better than the 20-day moving average, better than the 50, better than the 200, and that's the very definition of a bull market. In fact, you can see the shaded area where we have been showing the 200-day moving average is now fallen off the chart because of today's price action. ADX has continued to increase and now is at 28.83, getting near the top end of normal strong. The Williams percent R10 overbought on a 10-day basis and an annual basis, and you can see by the slope of the 30-day regression line here that everything is very positive. Today was a extremely volatile day compared to the last really 15, almost 20 days, and so I would expect to see volatility start to curl up. For those of you keeping score at home, here's an intraday trade we made in the chat room with Silver Wheaton, symbol SLW, and this demonstrates that WMB technique, the Williams percent R, MACD histogram, and breakout on candles. And what you can see is we've got 3-minute charts built here, and we're looking at the open. And silver was the strongest sector for last year, and when Silver Wheaton started moving up sharply this morning, but the breakout here at about 39.70, it traded as high as 39.98, but sold off harshly shortly thereafter and ended up scratching that trade here. The WMB technique actually saved me some money today. As you can see, on this little pullback, Williams percent R had reached an extreme low condition, but we never got an uptick on MACD histogram, and so that helped me sit on my hands a little bit. I continued to stalk SLW all the way back down to where it closed the gap at 39.12, and ended up buying. Front-running the MACD histogram a little bit here, but when I saw it bouncing off this support level right in here, ended up getting a fill at 39.16 with a 8-cent stop, and ended up selling at 39.50 when it stalled out. Now it ended up moving up all the way back to 39.80 later in the day, before selling off and closing at a loss. However, this was a nice 4 to 5 hour trade, just getting back up to 39.50 because of the ability to front run that. But the important point on this one for me was it took a shot in the morning on strength, respected my stop and scratched that trade. I did not get right back in here because of the WMB technique, and by patiently waiting and stalking, I was able to cash a almost 5-hour trade on just a simple 50% retest off this bounce. All right, moving on to the daily trading plan. You can see that we are still in bull quiet. 69 on the annual RSI, high end of normal. 136 on the 10-day index tells us something important, and this is why I like the 10-day index. A number greater than 100 means that we closed higher than the highest high of the previous 10 days. So this tells us it's a breakout. The 36 tells us that it is more than 1/3 higher than the span of the 10-day trading channel. And so that tells us in a single number that we had a breakout, and then the relative magnitude of that breakout, a 136 is extremely high for a broad market index. The market mosaic factors here. The percent stretch above the 200-day moving average, 11.66 in the green. Slope of the 50-day moving average at 0.74. Both are color-coded green. That's very strong, very bullish. ADX continues to improve. We're in overbought conditions, and the ATR percentage at 0.56. I expect to see that change here and reverse back up now that we're into the new year, although we are still technically in quiet conditions. You can see on the 10-day index, we've been overbought for a long time. In the gap stats, there's no significant patterns still. The standard deviation of the gap is still 0.75%. The largest average intraday move that's still normal would be 2 1/3%. The average intraday move is still at 1.4%. No signals in the overreaction or channeling. Could have gotten in nicely on IWM this morning if you took the channeling system signal mechanically. The pivot point moved up more than $1 to 126.78, so it's now $3.78 above the key support level at 123. You can see here how volatility has fallen off the cliff. Again, I think it's going to go up here shortly. ADX continues to rise. In the 10-day max pain, American Express, Intel, Merck, Microsoft, and 3M. India, biotechs, gold miners, treasuries, and I can't remember what PHO is. Obviously, I don't trade that one. We have a 551W signal in SMN. Actually, I believe that is a 5-day down. I think I just put it in the wrong square. That's the double inverse materials. I'd be cautious about going long that one because of the strength we've had in materials. It's more than just 5 days up in materials. Triple screen, there are some symbols for you to look at there. The elder safe zone, we will see that just about everything on the planet broke out of its previous signal channel today, with the exception of VXX, the short-term VIX, which broke down below its previous signal. 3060 stealth, we're seeing stealth strength in utilities in Brazil, Merck, Bank of America, and Boeing. On the Dow and ETF tactical, the percent losers today, Intel and Coke. Surely that's got to be an anomaly. I mean, Intel, great company. It's a 10-day max pain and was a percent loser today. Could that be an overreaction? Possibly. We would take a look at that one. Percent winners today, Bank of America, Alcoa. Alcoa was an excellent trade this morning. We cashed the overnight holding and did some turbo intraday and banked some cash on Alcoa today. In the ETFs, you can see just how many of the broad indexes are overbought on a 52-week and a 10-day basis. Today, the losers were the commodities, which were the last week's winners, gold, silver, and ag. Big win in coal and natural gas today. So natural gas has moved from 5.5 to 6.3. That's 80 cents. That's a 15% move in 3 days. Not too shabby. In the pattern trading in the Dow, surprising number of dojis still, 8 dojis, 1 channeling signal in Merck. And Intel and American Express remain the max pain range compression. Those two are on my very short list. If they want to play catch-up, tomorrow would be a good day to watch them hurry up and get back up with their peers. You can see the strength right now in Bank of America, all greens, short term. And then Alcoa has been just a tremendous performer. It went through 16 today, went as high as 16.15 where we cashed it. That's if it can get back above 16, that's very favorable. If it cannot penetrate 16 this week, that would be a reason to look carefully at SMN and look to maybe catch some profits on the other side of an overheating materials sector. Among the ETFs, only a handful of dojis, no patterns. Consumer staples, healthcare, treasuries, the diamonds and oil, all for the max pain range compression. You can see the strength right now in coal. That's KOL could be a reasonable momentum play. We've had some success with some of the guys in the chat room trading UNG, but again, that's not a long-term hold unless you're very long-term, like you think it's going to 12 before it goes to 0, which is my belief. Just be careful on UNG. Last chart for tonight, the Elder Safe Zone channel. You can see just about everything there was fired green today, with the exception of some commodities. And that's an indication every single one of them was measurably stronger than their previous 10-day channel. So that's the news from Tortoise Capital. Keep your powder dry. Be careful in January with new market money and increased volatility. Honor your stops, honor your exits, and respect your position size. Good trading.